So to kick off, we're now through the traditional Chinese New Year slowdown. Cape-size period rates are well ahead of the spot market. Handy-sized bulk killers in Asia are outperforming some of the larger sizes. Can it last? Cargill, would you like to, as one of the largest bulk carrier charters, can you kick off by giving us your insights on whether this is another false dawn, or does this finally have some legs?
Yeah, sure. First I'd like to reply to some of Mitul's comments. Obviously, I work in prediction, so hearing those comments is not good for me, but I can also assure you there that every day, or the way we analyzed the market 5 years ago, it's very different from the way we analyze the market today. There's tons of data we analyze every day in real time, satellite data, to make all kind of predictions, short term, medium term, long term. So even there, innovation is working, no one's sleeping. So I guess that's a good sign. But anyways, so on the old school panel, the old school question, where can it last? So firstly, I think obviously I'm doing the Cape size at Cargill, so I'm taking a Cape focus. But we need to look where we came from, and the last 5 years we've been in chronic oversupply, and any rally we've seen in the market was basically driven by dislocation of the fleet. So dislocation of the fleet by definition is a very short-term phenomenon. So all the rallies we've seen over the last 5 years have been very short-lived, and that clearly hit confidence or depressed the market, and the belief in a sustainable recovery has really waned. So looking forward, I think, or actually last year already, we've seen something more of a sustainable recovery. We've seen rates gradually grinding up. We've seen the market going in excess of $20,000, then falling, but not as sharply as we used to see the market fall. We've seen it bounce at $20,000 a couple of times, or at least a couple of times, and we've reached $30,000. So that's a very good base to start from for the next couple of years. So talking about the next couple of years, 18 and 19, I think the good news is, there's actually only good news, but the supply side is very limited, right? We know what's in the order books, we know what's in the order books for 2018, we know what's there for 19, and it's a growth of less than 1% each year, which obviously, compared to where we're coming from, is next to nothing. Demand looks also very robust. We've got still plenty of iron ore to come from Brazil. We've got bauxite from West Africa, which is doing very well. It's been doing fantastically over the last 2 years. We've already seen that tighten up the market a bit. That should continue over the next 2 years, between 10 and 20 million tons, depending on how the project's coming online. And also we see more Canada front haul, again iron ore. So that's it on the iron ore side. It's all very long ton-mile business, which is obviously very good for the market. It also is all business that's fundamentally creating a bit more of an imbalance between the Atlantic and Pacific markets. So the Atlantic gets fundamentally tighter, which in history has shown us also that's what's driving volatility really in Cape-size. Sorry to keep going. So just to conclude this quickly, I think from a capacity utilization point of view, we haven't seen anything like it in the last 5 years. So if I had to put a call on it, I would say that the next 2 years could average around 20, maybe go $20,000 with volatility spikes driven by dislocation, or when the stars are aligned and spikes exceeding $40,000.
Michael, we've been meeting at places like this for years, and you've always been sort of cautiously optimistic most of the time. Now, you obviously have Cape exposure, but also in some of the other sizes. Do you share that general optimism still?
Yes, I do. I mean, in short, we came from a level that was not sustainable. Right? We came from levels which weren't covering operating costs, so it was a situation that couldn't continue. So in my mind, we're back to a level now where ends are sort of meeting.
Are you normal or clear for takeoff for something bigger?
So okay, I like to be the contrarian, but the problem is I can't really, if it is sort of mention various factors which I fully agree with. So the only problem is everyone's aligned. Everyone thinks this market's going to take off. Everyone, and the problem is that very rarely does that happen, right? Something out of the blue happens, and that will result in something which we didn't expect. But long story short, I also see, it's very clear what's being built. It's not much, and we're seeing seaborne demand growing, so that will result in a stronger market. So next 2 years should be good, and then it's going to fall off a cliff, because the problem is there's a lot of new building capacity. The only saving grace is that it seems to be the lack of cash. It's not that easy getting finance, and that hopefully will save us from a disaster.